The financial landscape in Canada is once again bracing for change, as the Bank of Canada is widely anticipated to announce a further reduction in its key interest rate. This comes on the heels of two previous cuts earlier this year, and many analysts are expecting a decrease of 0.25% this Wednesday. Such a move, while modest, could provide some much-needed relief to homeowners who have been grappling with rising mortgage payments over the past few years. To put it into perspective, for a homeowner with a remaining mortgage balance of $240,000 at a variable rate of 6%, this reduction would lower their rate to 5.75%, translating into a savings of $34 per month. While this might seem like a small amount, it's a step in the right direction for many Canadians who have been hit hard by the rapid increase in interest rates since 2022. The Bank of Canada's strategy has been to keep inflation in check, and so far, it appears to be working. Inflation in Canada has slowed to 2.5%, the lowest it has been in 3 years, giving the central bank some room to ease its aggressive monetary policy. However, the effects of these rate cuts go beyond just controlling inflation. They are also a response to a sluggish economy. Consumer spending is down, job creation has stagnated, and the high cost of borrowing has put a strain on many households. Despite these rate cuts, the relief is not universal. For those who have seen their mortgage rates jump from as low as 1.50% to over 5.75%, a 0.25% cut might feel like putting a band-aid on a much larger wound. Mortgage brokers like Stephanie Briere have noted that many of their clients are still struggling to cope with the dramatic rise in rates over the past few years, with some renewing their mortgages at significantly higher rates than before. Looking ahead, economists predict that the Bank of Canada will continue to lower rates in the coming months, with the potential for the key interest rate to drop to 3% by next year. This gradual easing could help stabilize the housing market and make homeownership more affordable, but the path forward is still fraught with challenges. In the broader economic context, while the Bank of Canada's efforts have helped curb inflation, they have also highlighted the fragility of the Canadian economy. The pressure on household spending and the potential for rising unemployment in the coming months are significant concerns. Particularly troubling is the unemployment rate among young people, which has climbed to 14.5%. In summary, while the expected rate cut is a welcome move for many, it is clear that the economic challenges facing Canada are far from over. Homeowners and prospective buyers alike will need to remain vigilant and adaptive as the financial landscape continues to shift in response to these ongoing changes. Stay subscribed for more videos.